Hello, Mr. Selby. How are we?
Mr. Gordon, I am excellent. It's been a very exciting morning, and it's not even 9 o'clock here in Toronto. So,
really, what's so exciting?
Well, as you know, there's only a handful of nickel sulfide opportunities, and we've talked about in the past that a certain major, BHP, is relocating their nickel exploration office to Toronto, and so even before the office is open, they've already done a deal. They are coming in over the top of another Australian to buy Norant for 55 cents a share, or $325 million, or about $1,500 per recoverable nickel ton, which is very exciting.
Yeah, saw that. We should talk about that one and implications and perhaps what sort of things we should be looking out for further down the line. But first, we better kick off and let's start with the market stuff and see what's going on there price-wise, because it's looking kind of frothy.
Oh, it's been exciting. As I said the last time we talked a few weeks ago, nickel had sort of moved out, had been stuck in a range for a while, broke out. And again, like most things, they very quickly moved to another technical level. So the key point there was the prior high before Tsingshan talked the market down, which was just over $9 a pound, or just under $20,000 a ton. So sure enough, it took about a week and a half, and it's worked its way up to that level, tested it. It's pulled back from there. But again, typically you'll see prices take 2 or 3 runs at a technical level before it makes through. And again, over the last 6 weeks, we've really seen sort of really robust market strength, stainless batteries, right across the board, China and rest of world. And so, I fully expect, before the summer's out here, that we'll get through that level. 22,000 or $10 a pound is a pretty big level. So I don't see us moving through that before the end of the year, but I think, we'll see perhaps in the next week or two, but again, it may take another 4, 5, 6 weeks. Fundamentally, it's about as good as it gets. Again, stainless prices, just said time and time again, number one indicator if you want some sense of where the market's headed, up another 5% week over week after another 5% the week before. NPI prices are up 10% over the last 2 weeks. Ore prices are moving higher. And again, I remember ore prices, NPI, in my view, were going to get squished this year in China, and that's not happened. Sulphate premiums continue to inch higher. They're still not at the crazy levels that we were back in February, but you're looking at almost a $4,000 per ton premium in terms of sulphate, just because the EV chain is scrambling to get the supply that they need. Ore inventories are starting to creep up, but nothing, again, just at the rate that the minimum that they need to do, and they still have a huge range to go. And again, that's why, ore prices are moving higher. So again, in terms of the, looking at that picture, that's about as robust as it gets in terms of, the underlying fundamentals. So that's why again, if you noted a more bullish tone in my voice in terms of prices moving higher earlier than I'd expected. It's definitely on.
Well, here's one for you. And someone just threw this. One of the members just threw this one out there and said, our markets are getting affected by the weather, right? We had Norilsk had a flooding. We've seen China flooding happening, and people are, assuming that there's going to be a need for massive infrastructure rebuilds, etc. And those sorts of stories, like we talked about this seasonality, rainy season in Indonesia, obviously as well. But is global warming starting to affect the markets? That was the question. Tongue in cheek, by the way, a little tongue in cheek, but
a little tongue in cheek. But climate change, and again, it's twofold. One is, in a market that's a little bit tight, a little extra demand, because again, it's not going to, as much as, 30 seconds of devastation shown on a weather channel in terms of, flooding and everything like that. But it is a tiny, tiny part of the world. So, your net impact on demand, but it is a little bit incremental demand. And again, half of what makes prices go is sentiment. So if that helps sort of drive and underpin a more bullish sentiment, for the next 2, 3, 5 years, then I think, we'll see that for sure.
Okay, and we've also said, thanks for that. I think it was sent in tongue in cheek, but it kind of amused me because we did have a similar sort of conversation last year with the flooding in America, right? So, right. Okay, we've seen 235,000 electric cars and probably now some electric boats registered in China. So things are moving afoot there.
Oh yeah, no. Again, every nickel super cycle is caused by a new source of demand that people underestimate how quickly it happens and how large it will get. So, that again, that number's up 160%, over a year ago. And remember, China by June was already back on. The rest of the world was shutting down, but China was, sort of already, mostly fully ramped up again. But the key number is market share. They're already, in terms of battery and plug-in, are 15% and 12% of sales in China are batteries. Again, already, this is not 2025. This is not 2030. This is, and again, we're talking, most people, talking about 30% by 2030. Again, the pace of adoption that you're seeing in different countries is just really, really, really ramped up. And again, I would not underestimate the fact that US and Biden are really pushing EVs is going to make that happen, a lot sooner than normal. And so, again, I think, it paints a pretty bullish picture for the middle part of this decade.
And we're starting to say, this slightly into American politics, are we starting to see less of this polarized politics in this context, in the context of, whether it be critical minerals or the green thematic or EV, et cetera? Are they coming together a little bit more?
I would say, that was the one thing that was interesting is when Trump was in sort of the critical mineral strategy was one of the few places where the Democrats and Republicans we need to get China out of our supply chains, was sort of united them on that front. Sadly, polarization wise, I think, again, EVs probably, may end up as I'm hoping that doesn't happen that way, but, the vaccine, not being vaccinated is a badge of honor for certain people of certain political stripe in the US, and I've got a feeling, we may see something, similar going forward. But, again, as long as the other half all buy electric vehicles, then, the numbers will all still look, very, very good going forward.
Yeah, we should probably get it. We should probably dig into that in the next few weeks or so, just so trying to understand what the numbers are looking like over there. Okay, well, I want to talk to you about a few things. I want to talk about BHP, LG Chem. We've got the guys down at Blackstone as well, and Norant. But first, I just want to ask you a question. I'm not going to tell you the name of the company. It's a scenario. It's a picture that was painted by a CEO. He came and talked about hunting for gold, finding gold, but also finding some base metals too. Nickel at 0.14%, right? In northern Canada, surrounded by a gold district, like Nico Eagle are involved there. What's the chances of someone like that being able to monetize the nickel component if there was a nearby, within 100 kilometers, nickel facility operating? Would that be something that could work?
At 0.14?
Yeah.
Yeah, you'd need, again, to make again, if you happen to be mining it as you're mining the gold, then perhaps, but, at that low grade, you need, again, we're 0.26. And, we need to operate at 40,000 tons a day, mine 14 million tons a year out of the gate, and ramp up to 100,000 tons a day. So unless it's a very large scale deposit, I don't think that would be, that would be the case. It's pretty tricky. Again, just as an example, my old, the old company and old asset Beta Hunt, you got gold and nickel, sitting within 100 meters of each other. And, again, it's more the payabilities deals with the US. It's just, it would be, with the payability, we needed a couple percent nickel to make it work. Again, they've done a great job finding a huge amount more nickel at Beta Hunt, and even then they're not flipping the switch right away. So yeah, I would say those grades is pretty tough. Pretty tough.
Okay. Like I said, I didn't want to tell you the name I just wanted you to as a broad brush response. So why don't we talk about a couple of those companies? We'll start with Norant, with BHP. You gave us the base outline to that deal. So why have they gone now? Seems is it expensive or is it a good deal for both sides?
Well, no, I think, at the end of the day, first off, hats off to Alan Coutts and Steve Llewellyn and the rest of the Norant team. They were members of the nickel expedition that trudged across the desert for 10 years, waiting, advancing nickel projects in a market where no one was interested. And so they did a great job continuing to advance Norant during that time frame. So it's good to see them reap the benefits now. No, I think, to me, I always find amusing is that, companies look at an asset at $10 million and it's too small, it's too tiny, and at $50 million, it's interesting, but it's still too small. And then 6 months later, they're in a bidding war at $300 million because now it's a strategic asset. So, a little bit with Norant is, 15 months ago it was a quarter. You could have picked it up. It was trading at 13 cents, which is about a quarter of what BHP is paying now. So, the fact that they've come sort of full bore at it, I think reflects two key things. One, and it's a great read through for Canada Nickel is, one, at the end of the day, and we said this before, that there's basically, you're looking in terms of nickel sulfide assets of any scale in a lower jurisdiction, it's kind of one hand, maybe two hands. And so, what happened was Wyloo put this into play. So this is a private company. So it goes into private hands. There's no way BHP can ever own it. So even though they're at the top of the food chain, if it's not another public entity buying the company, it's like I either have to buy it now or never. So, that's, part of the reason they did it. But I think, in terms of the scarcity value, so not only are they paying a massive premium to what was there, B, Wyloo was able to buy about 30% of it from Resource Capital, which was a major shareholder. They were winding up one of their funds and needed to sell their position. And I was very well shocked. They could have had that at any point in time during it. And so, Wyloo already owns that. And BHP's coming in over the top of them to get this asset. So again, nickel sulfide assets, good nickel sulfide assets are very scarce, and I think that, reflects BHP's, need to get anything they have. And I think the other part of it too, we've talked about before, they're opening a nickel exploration office in Toronto. That's a long way from Perth. And again, they're not here for the weather or the Leafs tickets. They are here because they think Canada is a good place to buy more nickel assets. So, I think, again, read through across all of the other sort of Canadian domiciled nickel assets that are out there, whether it's Canada Nickel or FBX or Giga, the other ones in terms of large scale resources, those are the kind of scale that BHP likes. What they like with the Ring of Fire is just the exploration potential. It's a massive, massive area that's been, really relatively unexplored. There's a few $100 million that got pumped in there, but after the original discovery. But other than that few year period, it's seen very little exploration.
Well, it kind of feels like the Norant team have got a great deal for their shareholders for sure.
Yeah.
For BHP, it's not a big deal, but it shows intent. I mean, they could take it or leave it if it doesn't work out. I think the interesting thing to me is that geographically, it's kind of a little bit isolated. It's a little bit isolated, right? Compared to...
Oh, it's not. It's a lot isolated.
Okay, that's being nice. I'm a nice guy, Mark. It's very isolated. No infrastructure, no meaningful infrastructure. That's going to be a lot of money just to build the infrastructure to be able to start mining there, let alone the capex for the project, proper for the project itself. So they've got to believe the exploration potential is significant. So they will have seen something or think they've seen something, won't they? Yeah, no, I think that's the other major read through is, they would see the exploration potential. No, it is, they will find a lot more deposits once more infrastructure gets into that area for sure. But I think the other thing it underscores is, again, BHP is not making this investment because this mine's going to get in production next week. This is going to be a second half of this decade, or potentially more. So, they obviously have a very constructive long-term view on nickel, right? So again, if they like Canada and they like long-term, assets, again, check in terms of another bunch of companies that are out there in terms of, the kind of asset that BHP, might want to pick up. Okay, so BHP would be looking at Canada as obviously I get the Toronto office thing. That's kind of, you can read a lot into that, but they need a lot of nickel. They've made a conscious decision thematically that nickel is something that they're going to get back into. Is that what we're saying?
Yes, for sure. Yeah. They underscored it. It's a future. Their term is a future-facing metal, which they've defined as copper, nickel, and potash.
Right. Okay. Fine. Okay. So what else can we take away from this? Are we going to see more deals soon, or is this just, in a sense, I get the sense this might be the first of many, but I like you. I'm slightly amused by stepping in now as opposed to earlier when they could have picked up a better deal. But
yeah. Well, again, it's the fact that a private company was buying it and became a now or never decision. That if you want this asset, now is that you have a window that's closing, and so again, that's where. Again, I think we tell investors, don't get disappointed if, there's not 4 bids tomorrow for 4 different companies. It's one of those things that as soon as one bid emerges, you'll have another pile of people, piling. Again, I lived through it firsthand with the Inco Falconbridge merger back, 2005, 2006, which I was, in the middle of. And, again, you had a pile of different buyers for all those companies that, again, a few years earlier, you could have picked up, at a fraction of the market cap. But once something's in play, then everybody gets keen. But the thing to focus in on is scarcity value. It's not like, if people decide they want more nickel sulfides, there's not 30 projects or 15 projects. It's literally, there's 5 to 10 assets that are at some stage of development that are in lowest jurisdictions. That's the fundamental that are of any scale that would matter to somebody of a BHP.
Yeah, I guess time. Okay, for Wyloo, obviously. Would they have had the depth of reserves to be able to actually, fund the infrastructure for this? So they were credible, right?
Yeah. Oh, for sure. No. Wyloo's great. And again, another stock to look at is Orford Mining, because Wyloo picked up West Raglan. So again, that was their first deal. So that is something I would keep an eye on for sure.
Okay, so where I was getting at was is because we've seen this, and there's a handful of companies that come on the show and talked about, they've kind of got a meaningful shareholder, but they don't have the balance sheet to be able to actually do much about it. So they would need someone, this competitive tension, these other companies coming in and taking over or buying everyone out. And also similar scenarios where you've kind of got a Rio or a BHP sitting on, sub 20%. And, again, trying to get that competitive tension to ensure that, BHP don't kind of lowball you or Rio don't lowball you because there's no one else who can afford to do it. And I think in this instance, I don't think that's happened, because I think Wyloo were a kind of credible option too.
Oh, for sure. No. Wyloo came in, and I think it was pretty opportunistic of them to come in at this point in time. When nickel markets coming, they're making some good progress in terms of First Nations and the infrastructure that's needed to connect the Ring of Fire. So, I'm glad to see other bidders emerge for the asset. And again, too, I think the sort of the scale of investor that you're talking about, is key. Again, the pushback that we get on our project sometime, and got pushback on my past life with Dumont, was, it's $1 billion. And you know what? If you're BHP or Rio Tinto, $1 billion is just that's the starting price. I mean, BHP bought Jansen, a decade ago as a potash mine. They sunk another $4 or $5 billion, and they haven't even they haven't even made a production decision yet. That's just sort of pre-production, just to get it ready so we can move quickly when the market is there. So, again, they're looking, they want assets where they can deploy $5, $10, $15 billion in capital, in a region. And again, I think, that's the kind of thing that BHP is going to be looking at doing going forward.
Yes. I mean, but that's important to understand is their timeframes are so different. The cost would be, difficult for most to even comprehend. For them, it doesn't matter either, because they are going to have to wade their way through First Nation issues, local issues, provincial issues, and get, it's kind of like grind people down a little bit. Mm-hmm. Get them over the line is probably a better way of phrasing it. It could be decades before they actually produce, but it doesn't matter. It's a long-term
I'm hoping it's going to
planning.
be sooner than that for everybody, but and for the province, it'd be good to have that region going. But yeah, no, it could. I mean, it's been. It was discovered in 2007. A feasibility study completed in 2012, and we're here in 2021, right? So, it could take a while. But again, it's they're thinking about the right scale. They're thinking about the nickel in the right time frame. And again, if BHP is thinking that way, I can assure you that all the other majors are really starting to think in a similar vein in terms of how things are going to unfold here.
Yeah, because essentially we had an interesting conversation with Howard Klein and Rodney Hooper on lithium and what's going on there. And we're seeing big Chinese companies going around and just buying up the most advanced development projects. They've got 3 in the last month, right? I mean, just over a month. But they're getting on and doing when others are thinking about it. What's our strategy? How do we come at this? Let's have a discussion. See you next month to discuss the same thing. And these guys going from they've inserted themselves years ago in terms of being a technical solution provider. They've got the balance sheet and the backing to go and buy these things now when there's no other options on the table. And we're seeing them alongside it recognize what it's going to take to build a proper EV ecosystem, and get on with it. And we in the West seem to be, we've seen a little bit of movement from the OEMs in terms of the money that they're in the last 2-3 years. This is the kind of first meaningful move, is it, in terms of the majors, in terms of the battery thematics, the commodities involved? Yeah,
and again too, I think the one deal they did do cheaply was a year ago May. They picked up Honeymoon Well from Norilsk. They didn't publish a price, but the rumor was it was around $100 million for the other large scale low grade sulphide in Australia. So they've already made again two of the 8 or 9 assets that are worth owning. BHP's already put their paw on, and then Wyloo put their paw on another one, which is West Raglan up in northern Quebec, that's owned by Orford Mining. So and again, that's part of my worst fear is again at the end of the day, if we, we'll sell it to the highest bidder, or we'll advance it ourselves, depending on whether the market's there. But what I'm terrified of is getting bid too soon before we have a chance to really unlock the value, because we think there's a huge amount more value, to unlock here. And it'd be nice if nothing came over the transom for another 12 to 18 months. So we can demonstrate, just how valuable the project we think is.
Because I was thinking about this earlier in the week, specifically about you, actually, about your opportunity, because you've got district-wide potential. You've got a bunch of land packages now, obviously, and you're looking out to the future, and you kind of got plans in your head about what this could be. But if a big boy comes along like this, makes you a bid, and it's going to be, some sort of premium to where you are now, obviously, you're going to have to say to the shareholders, well, look, obviously it's a good bid, and you can take that today, bird in the hand and all of that, versus, hey, this could be significantly bigger. Give me, I don't know, whatever, 3 years, 5 years, whatever your number. I don't know. We've not had a conversation. That's a difficult one for you, because you know what I mean? It's great having money in the hand. It always great, right? But when you see the potential of the scale of this thing, it could be significantly more. But that's an interesting conversation to have.
Oh yeah, and I think the key thing is to let the shareholders decide. Because again, there's been places where management has fought off bids, thinking, oh, this is going to be worth, hugely amount more two years later. And again, the boom is over and the values come crashing down. But again, you let shareholders decide, if it's a good bid, that you take it to shareholders and you let them decide, what they'd like to do, with the company, because it's
their company. It is their company. Mine. But it's also your job. It's also, it's incumbent on you to put the case forward for both, right? And I think that's always interesting. We've sort of seen instances, as you're right, in the past where people do hang on a little bit too long, and it all goes to shit in a handbag, as they say in these parts. And then there's instances where these things just go on to be absolutely enormous, and you kick yourself. You just go, oh boy, blew it.
Left a lot of money on the table on that one.
10 bagger, I think, is the usual cry. Right. Well, let's get back and talk about BHP's other deal they did this week, which is the offtake signed with Tesla. What can you tell us?
Yeah, no, and again, before this morning's announcement, what I was very excited about over the last 2 weeks is some real concrete steps around the downstream in nickel. That, again, if you've been watching these, that's something I've been banging on the drum on. Nickel downstream has been an oligopoly. The downstream confiscates a huge amount of value from the miners, and again, that's, part of the reason why there hasn't been a lot of successful nickel companies is it's been very difficult to always get the value of your product from the downstream. So what I said was going to happen, Chinese are going to build lots of capacity. You're going to see concentrate to final product plants get built. And so, what's been nice over the last few weeks is, one, you've seen BHP do a deal with Tesla to pick up about, they didn't quote production, but sources say it's kind of 20 or 25% of BHP's production. It'll be interesting to see whether it comes as sulphate or as whether as nickel powder. Elon Musk, in his battery day presentation talked about they want to use nickel powder directly. They think sulfate's a stupid product, which I agree with. And so, we'll see which of those two, BHP will actually supply them. And again, that's one of the few deals that Tesla has done so far. They could have done a deal with any Chinese company in Indonesia, and they haven't. So obviously, they don't want to use that nickel. And again, BHP, among sources of nickel, that has available supply, is one of the cleaner, greener sources of nickel that's out there. And so was very glad to see that. The other data point this week was in terms of purchasing by Chinese companies of nickel intermediates, which is MHP and MSP, which is the product that comes out of a laterite plant if you don't make a final product. That's now 93% of the LME price. So again, you don't have to do any refining. You just make an intermediate that grades anywhere from sort of 40 to 55% nickel, depending on the product, and you ship it off to the end market to get done. That's what most people do in most metals. That's how it works. Nickel, that wasn't the case because, 9 years ago, those products were trading at 72 to 75% of the LME price. About 2 or 3 years ago, they moved up to 80. A year ago, they moved up to the high 80s. Again, if you look at the cost to get to a final product, my view was always the low to mid 90s is where it becomes a break-even proposition for nickel refiners that, of scale in China. So, I think you'll see prices now going forward in the low 90s, even if nickel prices come off or sulfate prices, premiums come down a bit. So, sort of that wall's been knocked down. And again, 15 percentage points, that's all gravy, right? So in terms of free cash flow, that's a massive, transfer to the nickel miner. So again, any future nickel miner, producer of intermediates, is going to be, way, 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 way ahead. And then the other big news was Blackstone Minerals. They've got a deal with EcoPro.
Can I ask you, sorry, Mark, can I just ask you before we get on to Blackstone, because that's an interesting conversation, but just in terms of this, people talk about buyers markets and sellers markets, and obviously, that kind of point at which it switches over is quite an interesting one, that change of power. And there's pluses and minuses and how you play that. But once it becomes a supplier's market, that's when there's a little bit more price control, right? It just happens, right? Because you guys get to be a little bit more selective. And when we talked about supply demand fundamentals before, we factor in lots of things, but we've never really spent much time at this end. I mean, when were we last in a supplier's market, and what were the kind of behavioral components of companies? How did they interact?
In terms of nickel specifically, or more? Yeah.
Well, in nickel specifically, right?
Yeah, in terms of selling concentrates, or literally, like, and even then it was a very brief honeymoon, sort of in the mid to late 2000s. What had happened, again, nickel was an oligopoly for the most part. What changed? Tsingshan came into the market, and like a lot of Chinese companies, it's like, we want everything nickel. We're going to ship it to China and we're going to process it. And so they bid up the prices. So prices that for like concentrate were in 65 to 70% payable, suddenly popped up to around the 80% mark. And then the structural issue with nickel in China was Tsingshan's plant is literally up towards Mongolia, on the west side of Mongolia. So they were buying concentrate, say from Australia, shipping it to a port, railing it like several thousand miles inland, and then most of the market in China is on the south and central coast. So they'd have to ship it back again, and then somebody at Tsingshan did the math and figured, okay, we're not making a lot of money there. And then maybe there are conversations between various groups around, this is the price that probably we'd all be happy at, and maybe we'll make sure that you get all the nickel that you want. And then so all of a sudden that 80% price started to fall back towards 70 to 72%, where it's at from say 2009, 10, all the way through, until a few years ago. So, things can shift very quickly when that happens. And again, I think this is the first glimpse. It's in another 12 to 24 months, that you'll start to see as the Chinese build more processing capacity, take matte and other nickel feeds, that's really going to continue to shift the power dynamic towards the nickel miners. So again, in every feasibility study right now, payabilities, a lot of people, unless you're able to demonstrate like we were in terms of path to market, there's a lot of upside, baked into what, people might be willing to pay, should be willing to pay in 3 or 4 years versus today for those nickel feeds.
Right. I guess where I'm sort of going with that question is just trying to understand, how long does power reside with people, and decisions made during that period, how quickly do they get unpicked? So for instance, again, we've had a conversation in the past about rental of battery materials, right? Where you lease them out, however you want to phrase it. But basically, people are paying you for your material, but you still own it, right? So is that a real conversation, and could it happen, or is that just the sorts of conversation happen in the euphoria of a demand boom?
Yeah, no, it really comes down to the fundamental sort of supply demand in each market. And typically what you see in copper smelting or zinc smelting and refining is, again, the miners typically have the upper hand. There's only usually brief periods where things tip in favor of the smelters, and but for the most part, once the range resets, and we're starting to see that range reset, then it's just sort of bounces back and forth within a narrow range, because again, for the Chinese, once they decide to build processing capacity, they build lots of it, and they build way more than they need. So that phenomena tips the power into the miners. Again, just think iron ore and steel. Who do you think between BHP, Rio Tinto, and Vale, and the Chinese steel company or the global steel companies, who's the ones controlling the balance there, right? It's very clearly the iron ore miners, the ones capturing most of the value for the most part on that front. So, again, I think, nickel was at the bottom of the pack, and I think we're going to find ourselves in another 2, 3, 4 years, much closer to the front of the pack in terms of capturing the miners capturing the value rather than the other side of the equation.
Got it. Okay. So I just wanted to just throw a couple of questions at you on that. Well, should we talk Blackstone? Yeah. Go on then. They're doing some nice stuff.
Again, this is I've been talking about for a long time. They partnered with EcoPro, who's one of the leading high nickel precursor makers, and Trafigura, who's one, along with Glencore, the larger metals traders. And so they announced a while back that they're going to build a plant in Vietnam where nickel concentrate comes in the front end, and battery precursor material that you can put in a can to make a battery is going to come out the other end. Again, in my conversations in past life, current life with the supply chain, that's from the getting the stuff out of the ground and getting it into a battery in the car. That's doing those set of steps that way is the thing that makes far and away the most sense. So I was glad to see they put out a PEA a few days ago on that concept, and it's massively value accretive, in terms of doing it that way. So I have a little concern about the technical risk around pressure oxidative leaching. Again, the only other plant that's used that was Long Harbor, and that cost about 10 times what they're forecasting the plant in Vietnam is going to cost. But we'll see as it goes. And again, they've got very strong partners. Particularly EcoPro's got the technical knowledge in terms of how to refine products to get them to a very high purity. So it'll be great to see how that unfolds. And again, I think you'll see more of those get built around large assets going forward, because it's the best way to deliver nickel into the battery market.
Okay, so one to keep an eye on for sure. I mean, when you talk about Long Harbour, what sort of numbers were we talking about there?
Oh, Valley Long Harbour, they spent probably $4 to $5 billion.
Wow. Okay.
To produce about 50,000 tons of nickel. And again, the other part too, that with the EcoPro thing, again, underscore the importance of scale. This is a facility that's going to process about 400,000 tons of feed at about 11.5% nickel and produce just over 40,000 tons of nickel in a battery precursor. Again, we talked about our high grade concentrator, Canada nickel. So if you can put triple the grade into a plant, most of your costs are fixed and your per pound cost is going to be a lot lower. But again, you're going to need to build these at a certain scale. So if the bigger assets will have access to this opportunity, where again, the smaller scale is going to have to sell to a third party. But as we just talked earlier, again, the price for all nickel intermediate should go up, very dramatically, versus what we've seen historically. So
okay, yeah, so yeah, it kind of comes back to, because again, we talked about Neometal's nickel project that was spinning out and so forth. I thought Chris was, maybe I said this last, I can't remember, but I'll say it again. Chris was really straight. He said, we need $25,000 nickel for this project to work. We know that. We're not trying to kid anyone, but it's going to get there. So don't worry about it, right? So that's what you're buying into, a future option. And I guess there will be a few projects around the world like that. And then there's, going to be a few projects which are just going to struggle even at those rates for a while. Just know what you're walking into, I guess, with your investments.
But again, this Blackstone is great. And again, structurally, Vietnam had a 25% export tax on concentrate. So there's a massive incentive to process material locally. So, again, it's a massive win-win for everybody involved in that transaction. So very, very glad to see that move forward.
Brilliant. Okay. Well, look, Mark, we've taken up enough of your time. I know you're busy today, and appreciate that. And glad you're feeling better. You were a bit ill last week, weren't you? A little bit.
Yeah.
Under the weather.
All good. So.
Good. Okay. You got your is that your lumberjack t-shirt? Is that what it is? Is that what we're looking at?
I'm going outside to chop some wood. Yes.
Fantastic.
Yeah.
So I do like a stereotype.
Yeah, exactly.
I'm off to pick some potatoes. So we'll see you next week.
There you go. All right. Take care, Matthew.
Cheers. Bye.